we're going to expect more homeowners to really consider listing their properties.
Hello and welcome everybody to the Housing Tips. It's the show where we talk about housing information, housing news, and everything in between. I'm your host, Eric, and if any of that information sounds of interest to you, please consider liking the video and subscribing to the channel. It would mean so much to us. I'm joined today with my co-host, Jesse. How are you today, Jesse?
Doing good, brother. How you doing?
Doing well, can't complain.
And
2025 is just right around the corner.
what a better transition than today. We're going to talk about the fall California housing market forecast, and that was published by CAR. So we have the article, it'll be down below.
And we will share it on the screen as well. But let's go ahead and talk about that, Jesse. What were some interesting things that you thought about it?
Yeah, so they were projecting mortgage rates to drop, and that's what been everyone's been asking me, when are they going to drop? When are they going to drop? If you guys listen to the podcast, we're letting you guys know right now. Okay. So they're projecting it to drop from 6.6 to about 5.9% next year. So we're going to expect more homeowners to really consider listing their properties. And so that's going to alleviate some of those pressures in regards to inventory. 6.6 to 5.9. That's a good amount.
More than half a percentage point.
Yeah. What do you think, as rates drop, that people will start considering putting their properties up for sale as opposed to just sticking around?
Oh yes, even for myself, I would consider once it reaches a certain percentage point, I'm looking to refinance my place. And
Sure.
same thing, I know that's something in the article that's super interesting. They talk about is the lock-in effect, which is people with those 3%, sub 3%. I've seen some people with sub 2%. They bought down a ton of points and everything that they have no interest in selling their house. They might want a new house, they might want something bigger or smaller or move to a different area, but they can't go from a sub 3% or 3% loan and then go into a 6, 7% loan because then that payment just balloons. But something very interesting is a lock-in effect. But would love to hear your thoughts, Jesse, about the lock-in effect and what your thoughts are about everything.
Yeah, that lock-in effect of people just not wanting to sell or put more inventory on the market. They're like, well, I guess I'll stick here for the next 60 years. And so it makes it harder for them, that buyer. But I feel as the market stabilizes and the easing of the lock-in effect, more homes are going to be listed. And so buyers are going to have a more wider selection to choose from, making it easier to kind of fit their needs and their budget. Still, buyers a little bit weary of the higher rates, less inventory, kind of waiting for things to kind of go down. And we're letting people know, hey, we're going to see rates drop. We're going to see also more inventory. I feel like it's going to be a good opportunity for both sides. And how can I prepare for that knowing that these changes are upcoming?
Definitely. I 100% agree with that. I always say it every single video. But if you had a crystal ball, let's put on the crystal ball hat for you, Jesse. What are your thoughts of 2025? Do you think with the interest rates, going down to projected 5.9, do you think more houses on the market, or do you think it's going to be more of that 2022, 2020 vibe? People they just come to the market and they're just buying up the houses over asking with no contingencies. What are your thoughts?
I feel like people kind of learned from that time, and we hear about the people that mm, maybe locked in a good deal or price, but there was also a lot that had a lot of risks of
Oh
doing that
yeah.
and didn't talk about just them losing money or them having issues and just to struggle with all that. So slightly lower rate, more inventory. I feel like it's going to be a good opportunity to, negotiate because prices are still kind of gradually going up. So then we have to see of, sellers pricing it properly, more inventory, more buyers kind of going out. There's a lot of realtors telling me of open houses that they're having and honestly saying it was slow. And so
Interesting.
buyers are a little bit weary. So I think it'll be a good thing for both, as opposed to properties just sitting and buyers just waiting for things to change.
Definitely. Something interesting that I saw from personal experience is during the 2020, 2022, 2021 time when people were buying up those houses, multiple offers and asking, a lot of people were on the sidelines and they said, it's okay. Interest rates are at 3%. They're going to go a little bit lower. I'll buy when they go lower. And like you said, a lot of people ended up just holding the bag and just waiting on the sidelines where they're thinking to themselves, hey, I'm going to wait till interest rates hit 0%, -%. But they never did because there's no way a global economy could work if interest rates are zero. Even before the pandemic, interest rates were very, very low. They were in the 2% range. But even then, you can't do negative interest rates. That's how you destroy an economy. But I find it interesting that a lot of people, they just sat on the sidelines and said, oh, there's going to be a market crash. There's going to be 0% interest rates. That's when I'll buy. But sometimes waiting on the sideline is not the best thing to do sometimes.
Yeah, like the people that waited on the sidelines, now a couple years later, that same property probably went up 200,000, right? So
Yeah.
so now you have a little bit, you're having a higher interest rate and then higher property cost. I think that was like a lose-lose, but sometimes it's connecting with the right person that's gonna educate and teach and help feel rest assured, because it is scary, right?
Oh, yeah.
To
Having their
talk
finger
about,
on the pulse.
yeah, it's scary to talk about this bigger commitment for a lot of people. After the fact, when I ask them, they're like, "Oh, probably like one of the best investments I've ever done, and I
Yeah.
should have done it like way at the beginning when you let me know, or when I was thinking about it." But once I kind of got the nerves out, then I felt like I was ready. And sometimes you just gotta jump in it a little bit
Yeah.
quicker than you think.
Once you do it the first time, it becomes so
Yeah,
much easier. Still
easy.
stressful, don't get me wrong, buying a second property, a third property, there's lots of stress involved. But once you do it the first time, once you learn about contingencies, once you learn about earnest money deposits, which is something we're talking about, you could view that video in the description below. Shameless plug. But besides that, is there anything else you want to talk about, Jesse? Help summarize the video?
Forecast is looking great. If you want to sell, if you want to buy, reach out to the housing tips. If you have questions, the housing tips, we are here for you guys.
100%. Sounds great. Well, thank you so much for your time, Jesse. And if anything sounds of interest, please consider liking and subscribing. But until then, have a great day.